The earnings cycle of last couple of quarters has been extremely positive for the markets, and we have seen a pickup in the earnings in the last couple of quarters as well. So it is important to note, which pockets of the market or which stocks have been upgraded or downgraded based on their earnings potential since the beginning of FY22. Let me just highlight that out of the entire basket of stocks that we have selected, there are 367 stocks which are tracked by more than 5 analysts. And out of these 367, there are 77% stocks which have been upgraded as far as their EPS estimate is concerned since 31st of March this year. While on the flip side, you have 23% stocks that have been downgraded on the similar time frame. Moving on to the market cap profile, large cap stocks have been upgraded to the tune of about 10 odd percent, while small and mid cap stocks have been upgraded 5% each. Mega cap stocks, which are just 3 in number, those have seen an EPS estimate upgrade of about 2.3 odd percent, and micro cap stocks, the only ones to be downgraded as far as earnings potential is concerned, to the tune of about 2 odd percent since the beginning of FY22. Moving on to the sectoral profile, there are a couple of sectors which have clearly dominated this space. You have the material space. Remember that this includes the metals, cements, along with commodities stocks which trade in the Indian markets. Industrials have seen an EPS upgrade of about 14 odd percent since beginning of FY22, followed by IT and healthcare, which has seen an upgrade of about 7.5 to 8.5%. And then you have the likes of energy, utilities, financials, along with consumer staples that have been upgraded 1 to 5 odd percent. What's not done well, or where analysts are anticipating a downgrade in the EPS estimates, is the communication space, just about 0.5% lower, followed by consumer discretionary, where analysts are anticipating EPS estimate to be revised downwards to the tune of about 15 odd percent. Now remember that these are the stocks which have been the worst impacted by the COVID-19 second wave and the various lockdowns that have been imposed in different parts of the country. Moving on to the stock upgrades, let me highlight that this is dominated by the material space, which is metals along with cement space. SAIL, they are anticipating more than 100% increase in its EPS, while Tata Steel also, analysts are anticipating more than 100% increase in its EPS, followed by JSW Steel, which is anticipated to return 88% as far as EPS growth is concerned. And then you have the likes of Grasim along with JSPL, where analysts are also anticipating more than 70% EPS estimate revision since the beginning of FY22. What's not done well? Of course, like I was mentioning, consumer discretionary space and the stocks that have been worst impacted by this COVID-19 second wave. You have Interglobe Aviation, Indian Hotels, along with AP Fashion, where analysts are anticipating a sharp downtake in the earnings picture, along with Trent and Magma FinCorp, and Exide Industries also, where analysts are revising their EPS downwards to the tune of about 20 to 40%.